Good morning. We'll start in like 20 minutes. Crypto today, Bitcoin, Ethereum, XRP offer bullish signals as bets of September Fed rate cut rise.
Investing live European markets wrap, dollar sags, stocks hold firm while Ethereum rallies. Euro trot US dollar trims gains after a two-day rally with Fed speakers on focus. Pound sterling outperforms US dollar as Fed rate cut, speculation intensifies.
US Besant. There's good chance of 50 basis point rate cut for the Fed.
WTI oil triangle break leaves oil vulnerable to sell-off, Trump-Putin meeting ahead.
Gold price forecast. Gold US dollar ticks up to near 3,360, wobbles around 20-day EMA. US Besant. Trump came up with the Nvidia agreement. It is a unique solution.
South Africa retail sales growth eases in June. Yen gains on broader developments ahead of GDP, Scotiabank.
Music, as an art form, is essentially playful. We say you play the piano. You don't work the piano. In music, one doesn't make the end of a composition the point of the composition. If that was so, the best conductors would be those who play fastest. And there would be composers who wrote only finales. People go to concert just to hear one crashing chord, because that's the end. Same way in dancing, you don't aim at a particular spot in the room. That's where you should arrive. The whole point of the dancing is the dance. Now existence, you see, is something that is spontaneous. We thought of life by analogy with a journey, with a pilgrimage, which had a serious purpose at the end, and the thing was to get to that end, success or whatever it is, or maybe heaven after you're dead. But we missed the point the whole way along. It was a musical thing, and you were supposed to sing or to dance while the music was being played. If you see that existence is musical in nature, that is to say that it is not serious. It is the play of all kinds of atoms.
Brazil retail sales mum below expectations 0.7% in June, actual 0.1%. NASDAQ technical analysis all-time highs for breakfast. The U.S. dollar is lower versus major currencies to start the North American session as sellers push. We'll get a headline news update in about 90 seconds, so I'll let that run through and then I'll start. So, 2 minutes. What do you stink? Smell like a plan? Here's the update. The U.S. dollar is lower versus major currencies to start the North American session as sellers push. Brazil retail sales moaned below expectations, 0.7% in June, actual 0.1%. Crypto today, Bitcoin, Ethereum, XRP offer bullish signals as bets of September Fed rate cut rise. NASDAQ technical analysis, all-time highs for breakfast.
Investing Live European markets wrap, dollar sags, stocks hold firm while Ethereum rallies. Euro trot US dollar trims gains after a 2-day rally with Fed speakers on focus. Pound sterling outperforms US dollar as Fed rate cut, speculation intensifies.
US Besant. There's good chance of 50 basis point rate cut for the Fed.
WTI oil triangle break leaves oil vulnerable to sell-off. Trump-Putin meeting ahead.
Gold price forecast. Gold US dollar ticks up to near 3,360, wobbles around 20-day EMA.
Cool. All right, so that's the headline news. Let me know how you're feeling about today's markets. Are you very risk on, risk off, very risk off? Let me know how you feel. Checking the calendar here, we're 17 hours away from something interesting. No, so Aussie Jobs is next, 13 hours from now. We'll get that out of the way. Okay, unemployment rate expected to come down. Filtering out the rest of the week. Tomorrow, GDP. Tomorrow, PPI. Tomorrow, GDP. And then Friday, retail sales, consumer sentiment. But remember, it's not the sentiment, it's the future inflation expectation subcomponent of the UMich that we look at. So really, there's a lot going on tomorrow, but I think Friday is the bigger day. And not a lot of pushback news-wise based on yesterday's interesting CPI. So is retail sales going to cool off? Well, that's what we're looking at here. If actual is less than, okay, dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness. I don't know. About 75% chance of dollar weakness in that scenario. What do you think? Now, remember, it's not our opinion. It's what's happened in the past. Past performance does not predict future results. But we can say, well, tell me about this scenario. And here's a scenario of reversal, closed higher, continuation, closed higher, continuation, or I guess reversal, closed higher. Hasn't always been that way, but those are the times. 25% of the time, dollar got strong, like this. Cool. That's how we get that number of 75%. So you should just know, for all these pairs, that's what occurred in the past under that analogous situation. Not every time, but much of the time. It's good to know. And in this case, retail sales down. I would agree with that in general. So I'm working on a new tool. One of the things I'm working on is incorporating the CME Group's Fed Watch tool. Yeah. So I'd like to bring this in to TRADARS so you don't have to go to multiple websites. I've paid for access to their CPI, or API. So I've actually paid for this. It's been 2 weeks and they haven't given it to me yet. So I'm going to have to take over the project from the developer because I don't know, he's not convincing. I paid the money. I should probably get the access. But anyway, so I want to incorporate this, and this shows it right now. Well, let me update it. Might have changed a little bit. Oh, that's interesting. Okay, 99.9% chance the Fed's going to cut. So that's skewed left. You should know what that means for the dollar. But since Bessent's been talking, he's been talking about a 50 basis point cut. And look at that. That one person now has changed their opinion. So, but we went from a 57% chance of a cut in September to a 99.9% chance of one cut and 0.1. So there's right now a 100% chance of a cut, according to just this constituency, which is bank to bank. So it's the banker's opinion. All right, which ain't bad. We used to call it smart money, but let me tell you, much of the time they're wrong. And I don't know how they get their opinion. So I don't call them smart money anymore. But then I realize it's only, a few dozen or even a few hundred bankers. It's not really a large market when you consider you can go into because that's all private. If you're not a banker, you don't get involved in this. But if it's dozens or hundreds, it'd be interesting is to compare that to something that measures the opinion of millions, not hundreds. And that's what we're doing here. This is something that I'm working on for TRADARS, and it's somewhat working. Not all these numbers are correct, but the two that are correct as of yesterday, last night, in fact, I was working on this with the developer. 75% chance the Fed cuts. Now, it was, I think, 73.2, and then it moved to 75. And then I was involved in the calculations of this one, which is the ECB probability of a cut. And so the math is all similar but different for all of these, and we have to get the proper data sources and then clean the data and format the data and then change the math for each one of these so it gives us the appropriate number. So obviously the UK is not going to raise interest rates. Okay, so that's definitely wrong. But these two are right. As of last night, 75% chance the Fed cuts and 38% chance the ECB cuts at the next meeting. And so this will, once we, we're moving into the right direction so that we can compare the broad market, the public market, with the private market, and we'll have all of this built inside of TRADARS. What do you guys think? And then I'll have to figure out clever ways to display it so it all makes sense. So it's a decent start, don't you think? A real decent start. Yes, I really do stink. Isn't it bionic? Yeah. And then I'm going to build this so that we have oil inventories. So we already started. We just have to restart. What do you think of that? I think I should go back to here instead. So this morning we spent a lot of time on the scalping radar. Do you guys use this scalping radar? Maybe you're not sure how. Remember, it's showing you price levels. It's not necessarily telling you what to do. I think the more you think that this tells you what to do versus it explaining to you what, or informing you of what's happening. You should be informed with what's happening. So how do you go through all the charts? Well, I showed you emerging patterns, but these are patterns that seem to be happening. It looks like this flag is breaking. So you either, if you're a bull, you want to go to a smaller time frame and see if you can get this to go up. But if you're a bear, you don't want it to go any higher if you're going to take it down. So it's not that, it's not that this has to be up, but you should identify or be able to identify on the pound Kiwi, which I don't watch, on the 60-minute chart, there was a flag to the downside. So how does a bull look at this? Bulls look at it this way. Okay? So if they're, okay, consider this like a three-wave correction. I guess that wouldn't. Let's do it this way. Three-wave correction and then continue mission. So if you already had this, and this is the secret sauce, guys, if you're already a bull on pound Kiwi, then this is your heads up that three-wave correction is breaking, and you might want to look for continuation. So now you open these charts. Now, am I trading pound Kiwi under these circumstances? Heck no, dude. Are you going to trade the dollar or what? Jiminy Cricket, you're staring at the pound Kiwi? Well, Wayne had told me to. Who were the boss? Who's the boss here? Okay. You should, for example, I'll just make up some analysis. Let's say you're a bear on the US dollar. I don't know why. Let's just say. Then this is of interest to you, in particular, if you believe it will break. So down to support, but even in particular, yeah, so you already think it's doing this, but in particular, today and tomorrow. Same thing here. Same thing here. Pound Aussie, really? Well, pound has had some good news lately, so it makes sense. I think dollar would probably overshadow this, but once again, if pound is going to continue its strength move here, that correction is done. So now you need to start looking if you're a bull. If you're a bull, you probably want to look at this level in the future. So you could trade it now off the moving average. And if it goes to the green zone, you can buy dips. And what you're anticipating is the future uptrend. That's how you're supposed to be using this. Okay? TRADARS is not a signal service. It's an analytical tool that measures market sentiment, fundamentals, and technicals, and provides performance code. Yeah. If you need a signal service, I'm sure there's someone that's going to promise to make you rich for $50 a month. And you'll be able to buy a yacht, and girls in bikinis are going to dance on it for you. And you'll drive around in a Bentley. Totally worth the $50. That's not what we do. Cool. Anyway, so we got tons of stuff going on in Forex right now. Commodities. Okay, I'm a bear on oil. I have been since July. And interesting that we're starting to get some key moves. Yeah. So let's take a look at some of these moves. So we have U.S. oil down, sell the rip. And we have international oil down, sell the rip. Nice, right? So let's open this on a new tab. So you're a bear on oil. Okay? You're a bear on oil, right? You give it a -5. Nice. So you're selling rallies, right? Is that what you've been doing? What's your trade plan for the rest of the day? and tomorrow. Is that what we're doing? What's your plan? Cool. Something new says how accurate his tradings are. Once again, if you're looking for this to tell you what to do and you want to know how often it's going to make you a profitable trader, you should not sign up. Now, as far as its accuracy, it's incredibly accurate. This is the truth. This is happening. These are the numbers. This is the implied volatility. So it's accurate. Can you translate that into a trade? Well, that's why we have performance coaching, so that you can actually have a skill wrapped around actual data. Yeah. But I can tell you, like, let's go back to the scalping radar. So if you go here and then look at all the arrows and just start trading the arrows, you will fail. Because you're like, but it told me. No, you've already failed if that's what you're looking for. Yeah. So this is just data. So let's take a look. We look at interest rates, jobs, inflation, GDP, technical charts, seasonality, retail positioning, and institutional positioning. And from all of that data, we make a decision. Good. It's like see, we're doing updates right now, so they must be updating seasonality. So we make decisions. Does this mean gold will go up? No. But it's logical to think it has a high potential. So you might say, oh, well, I should look for opportunities to buy dips in gold under current fundamental quantitative conditions. Okay. So now you're like, okay, you've made a decision. And then you go to commodities. I think I have it set on. No. Settings, only gold. And we're a bull, right? Yeah, it's got a 10. So look on the 4-hour, we're consolidating, but we're buying off the bottom of a triangle. This is accurate. This is happening on the 4-hour. Okay, something new? 100% accurate. That is a high. That is a low. This is a lower high. This is a higher low. It is a triangle. Do you know how to trade a triangle? That I do not know. So you're bringing some assumptions based on fundamental analysis that you would probably like to buy and hold this. So we're looking at a 4-hour chart and a daily chart showing consolidation on both time frames. Higher high, lower high, lower high, lower high, higher low, higher low, higher low. This is definitely consolidation. Okay, definitely. But you're a fundamental bull, but technically, okay, great. So what is your assumption now? Your assumption is up, 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 down, down, buy, up, up, down, buy, and that in the future there's going to be an up, up, up. And in particular, you're going to need demand for gold, but also weakness in the US dollar. So you have to have that understanding based on what happened yesterday and have a fundamental belief in the value of the dollar over the next 6 months, let's say. Cool. So at the very least, if you want to be aggressive, How do you trade a consolidation channel if you're a bull? Well, you should know that we're consolidating, first of all. If you don't know that, then you're doomed, okay? But these are the future prices that you consider to be support. And if you believe we're going to break out, you should probably start analyzing this. Actually, I didn't quite get that properly. Okay. And you should be planning on this. This is why you have to have a combination of fundamentals and technical. And you should have an idea of supply and demand for gold and supply and demand for dollar, because there are two assets here. So do you have an opinion on US dollar? Well, you're going to need to. All right. So anyways, there you go, something new. The percentage of how accurate, it's nearly perfect. There's millions of tables, so do we ever get errors? Yeah. Millions of tables. Or millions of cells on, let's say, dozens and dozens of tables. Yeah. Databases, right? Okay. Can we get a few more participants in the poll? Can we get a few more votes in the poll? So something new. Are you still here, or did you take off? Yeah. I hope you guys appreciate that I focus on teaching you how to trade and invest versus just a YouTuber trying to make money, getting views. Let me sit here and scalp, and you can watch me do it, and then you can trade along with me, and we can make 20 pips here and 5 pips there, and I'll put 3 standard lots on it. You're like, look at all the wealth. Uh-huh. It's not how to trade. I hope you understand. Yeah. Well, my current hairstyle. Yeah. I'm struggling with my hair. Like, but I got the worst haircut of my life recently. And it is difficult to manage. I'm like every day considering shaving my head and starting over, but I don't want to do it. So I'm hoping I can live with it and grow it out. Now, you're like, Wayne, it's bad, but like you're over exaggerating. I spent a lot of time like a bald person doing a comb over. I have to do a comb over, and uh, it's weird. So if you see me up close, you look at it and you're like, is he sick? Is he is he on chemo? Like, is he all right? What's going on with that hair? It's something strange. It looks like I'm wearing a wig. It's that bad. My God, I can't think of what her strategy was when she was cutting my hair. It's way crazy bad. So, I don't know. So, anyways, that's why I look the way I look. Yeah. I know you guys don't care, but yeah, it's bad. It looks good, by the way. Oh, well, thank you. I appreciate that. I'll hang on. I'll hang on and grow it out is really the plan, but it's going to be weird for a while. Yeah, but if you saw me in person, you're like, huh, would be your thought. Huh, is that a wig? I mean, honestly, you're like, is he, is he wearing a wig? Is that a toupee? That can't be his real hair. Uh-huh. So let's take a look at the gauges. Let's just go through. I'm just kind of treading water until the stock market opens, really. Hey, we need more votes. Come on, guys. What are you trading today? Very risk on, risk on, risk off, very risk off. Okay. Now, one way to answer this question is with data. So, how do you feel? So, some of you feel very risk off. Oh, okay. Interesting. Okay. But that's how you feel. How does the market? Well, if you look month over month, put call ratios month over month have been favoring hedging, been favoring puts. Well, that's bad. S&P 500, despite that, is up. So month over month, we're up 3%, but the market's been hedging like crazy. Oh, all right. So we want to see if that hedging's going to change. But boy, oh boy, having analyzed over 1 million options contracts, it favors puts. That's bad. But the market's gone up. Well, that's good. Treasury yields have come down 3%. Well, that's good. And the yen, for over the course of an entire month, the yen is 0.5% stronger. Over an entire month. Well, it's neither here nor there. See, weak is risk on, strong is risk off, but 0.5%. Come on, bro. Okay. Gold is up. We score that as down, but I might need to change this because it used to be a measure of inflation hedging. Now it might be a measure of aggregate demand. And I might have to say, well, that's good. And that changes our score to 3. Actually, it would change it to 4, wouldn't it? From negative to positive. Okay. Anyways, dollar is break even over an entire month. So, well, that's neither here nor there. Short-term hot money treasury yields are down. Well, that's good. Right? Yeah. So long-term yields, short-term yields, down. What about volatility? Down. So risk on. What about week over week, which is much more of a measure of what's going on kind of today? Like we haven't even really opened yet. But right now, it's mixed. Falls down, puts are up. Stock market's doing okay. Okay. But, okay, not amazing, despite everything that's happening, but we might have been the other way. So the thing is, maybe weekly we're rolling over to more risk on, and then monthly is more risk on, and then today would be risk on. And therefore, you can answer this question quantitatively. So, very risk off. I look at this and I'm not sure why. I cannot quantify your fear. Doesn't make any sense, actually, logically. Okay. And so maybe you might find that you're too emotional. Now, for those that said very risk off, it probably was only one person, but to that one person, if fear or greed, let's just say emotions, are playing a role in your trading and you know it, you're like, maybe you're inherently an emotional person. Okay, great. I'm not poo-pooing on that. I think emotions have a good role in trading and investing. I do not agree with those that say you have to be like a robot, you have to trade without emotion. That doesn't make any sense. Okay? So, okay, your emotions are there for a reason, right? For example, when you touch a hot stove, there's a reason it hurts. Yeah, so your emotions are doing something similar. But if you find your emotions are not helping your trading, like that it's too much of a part, then this tool is going to be great for you because it's quantitative. There's no emotion here. It's simply giving you the quantitative facts and correlating them with risk on, risk off. And I can't quantify in any way your extreme fear. I'm not saying it's wrong. I don't know the future. But quantitatively, it doesn't make sense. And so you might really benefit from this. Also, for those that have extreme, risk on, I understand because things fundamentally changed yesterday. And that's why I'm building a tool like this, because you might see 75% become 80%, become 90%. And that would give you your risk on. And now you're quantifying your emotions, which is perfectly fine. But looking at 8 different constituencies, we might be there fundamentally, but we don't see it in the market yet. Not saying it won't arrive, and I'm not saying I disagree with you. In fact, I just might totally agree with you. I put a lot of money in the market yesterday, right at the open. Boom! So I made some assumptions. Was I risk on, very risk on? Yeah. Well, I don't pip and tell. But the thing is, you do have to make decisions, and you don't want to make them purely on emotion. Yeah. Some quantitative confirmation would be great, wouldn't it? So my biggest trade yesterday was the Russell, and it's up 3%. Nice. So why the Russell? I didn't even own the Russell until yesterday at the stock market open. So what prompted me? And why did it move that much? Well, the logic is something called duration. Now, duration sounds like it's a time issue. It is kind of a time issue, but more specifically, it's interest rate sensitivity over time. So let's let me. Oh, the it's still not loading. I want to select the asset for some reason. See, we're in the middle. Like literally, there may be developers right now working on this, and so it slows things down, or even makes errors in some cases because they're manipulating the data in the back end, not the front. But what I'm trying to get at is I want to separate and only look at like Russell versus NASDAQ. And this idea of duration, sensitivity to interest rate change. Companies in the Russell are medium size. And then relative to like Dow and NASDAQ, they're actually small. So you can think of them as small and medium size. Now they're still publicly traded, so it's not like your local laundromat with 3 workers, but still small relative to Dow, for example, which is a group of 30 monopoly, right? Right. Okay. These guys, they rent their factories, they rent the real estate, huh? They lease their trucks. When they need money, they go to banks or they issue bonds. All of this is tied to the interest rate. So they pay interest. And if interest rates fall, these companies become more profitable. If they rise, they become less profitable. And thus, sensitivity over time is high for these companies because it directly impacts them. NASDAQ, they don't really issue bonds. They don't go to a bank to borrow money. They don't lease their factories, they own them. They don't rent their corporate vehicles, they own them. And even if they did finance things, they have so much money that they would get like silly cheap rates. Like, so changes up and down don't really affect them much, if at anything, really almost nothing. Because generally speaking, they don't rent, they don't lease. They don't. Some of these like Mag 7s, they have so much money, they have no idea what to do with it. These guys are very sensitive. So, based on yesterday's CPI and the increase in the odds of the Fed cutting in September, I bought a boatload of Russell. Oh, I did buy NASDAQ, but for much longer term reasons. And I did buy some S&P 500. Great. Yeah. The Dow was facing something like this. So yesterday, the Dow spiked like this. And I actually took profit on this and saved the cash because maybe I want to rotate over to Russell or rotate over to S&P 500 or rotate over to NASDAQ. So that's called rotation. And that was an issue. So I had green on the screen, which gave me an opportunity to take some profit. Oh, look at there. And they're working on it. And so that's, when you understand monetary, dude, I should probably show you the course, right? If you understand monetary policy and how it impacts different investments, then you should take the course. Oh my God, I didn't plan on that, but that was a great transition. So if you go to Investor Boot Camp, okay, log in. $88 a year, bro. A year. Okay. So you log in. And then 1 week from now, we are starting live watch parties. We are going to go through the entire central banking monetary policy course once a week. It'll be an hour to an hour and a half. It's at New York lunch, London close. So bring your dinner, bring your lunch. We'll watch it together live. Yes, we will watch a recording live. So we can watch it as a group, and I can answer questions. I can stop the video and explain things. I can point things out. I'm there with you. Cool. So this is your opportunity to go through the course again. Make sure you've mastered the concepts of central banking and even commercial banking, because by the third or fourth hour, we will be reviewing how to manage the balance sheet of a commercial bank. Dude, this is a good course. Cool. So anyways, we'll go through all that. And then at the end, I'm going to give you the new monetary policy framework that is currently used by the Fed. So now there's the existing framework that is in the course, but then there's the new framework, and the Fed is using two frameworks. So before I teach you the new stuff, I want to make sure you understand how to run a central bank and what central banks do and how they normally manage their balance sheet and achieve their mandates. And then I'll teach you what changed recently, and then I'll teach you what the Fed has done in response to the market changes. And then you'll know the new framework. So by the time I teach you the new stuff, you'll be sharp as a tack on traditional monetary policy and management of central banks. And in general, money. And so what does this cost? Pay what you want, minimum $10, chip in $10. If you got more, or if you value this more, whatever, chip in a little bit more. Whatever you got. I'm passing around a plate. Okay, so we start that next Wednesday at noon, 1 week from now. So you will become an expert. And I'll show you the course that we're doing, Central Banking Fundamentals. So financial markets, financial intermediation, commercial bank accounting, money creation, which is the 1 over R plus E money multiplier, then the basics of how central banks work, and then a history of what happened up to the 2008 financial crisis and during the 2008 financial crisis. Ben Bernanke is our guest speaker here, because what he did was part of the situation we're in now, and we didn't know it quite then, but this history lesson led up to why the system had to change. Then we go over the Fed in general, then we go to macro and microeconomics, and then we do some fundamentals, and then we do currency correlation. Okay? Then we do advanced trading strategies, then we do international trade balance, and then I'll teach you the new Fed framework. Okay? What do you stink? Smell like a plan? So look at it. All these lessons. These are courses. Each course is probably on average 10 hours long. Many of them are much longer than that. Is that worth $88? Probably. Probably. I don't know. Depends on how much you value knowledge, isn't it? Yeah. So anyways, Investor Bootcamp, bro. That's where you sign up. So we start 1 week. Again, pay what you want. I think that's fair, isn't it? Cool. All right. Let's do some all in one day. No, every Wednesday. Yeah. Because I think the course is probably 18 hours long, not including the new lecture. So it's going to hit 20 hours, right, by the time we're done, Jay? So, no, we have to do. So the way I look at it is literally we meet at lunchtime if you're in New York, and feel free to bring a sandwich. I'll probably eat a sandwich and a bowl of soup, and we'll watch it together, and I'll answer questions. And the thing is, everybody needs the review, and nobody really wants to do it. I mean, look, you need to understand monetary policy and central bank. You know, and you probably need a refresher. But you're like, dude, I don't really want to do 20 hours worth of work. I get it. So this kind of gets us to do what we need to do. So if we're all going to meet, we're all going to meet up, right? So it'll be live, and I'll record the recordings. So right? So I'll record everything. I put it up there for a while. Yeah. But before, again, think of it. What the Fed does. This is what I got from the St. Louis Fed, right? So I went to St. Louis. I spent 3 nights in a hotel. I spent 2 days at the St. Louis Fed. And we went over the new monetary policy framework. 8 sessions. Okay? 8 sessions. And, I have 8 years of university education, primarily focused on economics. So I go there and I'm like, got it. Now it's actually a little bit more complicated than that. It's actually complicated enough where you really actually have to think about it, even if you have that much economic education. So if I'm going to teach you and I find it complicated, and you're kind of fuzzy in general on what central banks do and how they do it, well, then teaching you this stuff is kind of pointless. So this is why we have to go back and review it. Okay? So that's the thinking. You have to know this stuff. Do you guys feel comfortable not knowing how the Fed works? So let me go to Investor Bootcamp. So just check this out. Just go to the website. It has all the data here. And just ask yourself, do you feel comfortable not knowing how the Fed works now? So I put this page together, right? Here's what we're going to do. Weeks 1 through 3, 4 through 6, 7 through 9, 10 to 12, and then week 13, right? So look, I put some thought into this. and then you could pay whatever you want. Like, yeah, this is as close to an olive branch as there ever is. Like, I'm like, if you actually believe this central banks can impact the value of currencies, and you're a currency trader, then there's absolutely no reason for you not to sign up. There's none. Okay? There's none. Like, you pay what you want. And even if you haven't joined it, Investor Bootcamp, it's $88 a year. You don't have $100. Well, then why are you a Forex trader? This is the sport of kings and queens. But if you place, for most of you, you're already members of Investor Bootcamp, almost all of you. So, like, it's $10 or whatever you want to pay. Like, there's nothing stopping you from joining us. And you believe you need to know this information. So that's that. It's like you kind of have to do this. Or you're kind of not on the clue train or off the reservation or whatever analogy. I mean, like, this is an oh my God moment, in my humble opinion. And this is the power of group work, where you're like, yeah, Wayne, I know I need a refresher on monetary policy, but I don't want to do it. Well, all your friends are doing it. All the cool kids are doing it. Your group of comrades, we're all doing this, and you're going to miss out, even though you need it. And you're like, okay, I got it, so I'm going to do it. Great. That's the whole power of community. You're like, I know I want to do it, but I'm too lazy. I'm too tired. I'm too busy. Well, now you can. Now you can. It's, I guess it's like training to run a marathon, right? All your friends are going to run this morning, and you want to sleep in. Well, you're going to get your lazy butt out of bed and do what needs to get done, because you can't disappoint your friends. Cool, right? Yeah. So I hope you believe all that to be true. But if you don't think central banks impact the value of a currency and you're a currency trader, well, God help. So let's, no, actually, you know what? I want to go back. Let's burn through a bunch of charts. I want to use the implied volatility tool. Yeah. 10-year T note finally going up. My goodness. A little slow. It was surprising how much it came back yesterday. I expected it to be up, and now we are climbing. That's good. That's precisely what we want to see. But we probably have run out of room. So I don't know. Maybe it goes up to, stays above 112, maybe. Let's just do, you know what? Let me show you. Oops. Uh, 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 let me show you the hack. No, we don't want No. Gold and silver. Sure. Ooh. Yeah, I want to throw that in there. All the Forex dollars. All right. So we got silver and gold and dollar pairs on Forex. Cool. Wait, it wasn't supposed to do that. I didn't want all Forex pairs. I wanted all dollar. So I don't want that. Those are fine. Okay. Yeah, seems to be right. Did I hit cancel or something? Okay, save. Huh, it's not working. Interesting. Did not know that. Anyways, is this going to be up today? Looks like we hit projected high, a little more volume. You're a couple of hours late already, so but buy a dip maybe off the moving average. Euro dollar, yeah, dipping roll reversal maybe off the moving average or the projected implied low. Kiwi, it also has come down maybe off the moving average. We're approaching the implied low. Yeah. Rand, I want to see this fall. So sell off the moving average or off the implied high. Okay. We want to see this, what, go up or down? I actually don't know under this circumstance. But this is bearish, so you could sell off the top, roll reversal moving average. Peso. Oh, no! I think, what did they have? Retail sales earlier today? So anyways, unusually high for this scenario. Interesting. Something's going on with peso. Okay. Pound yen stalled pass. Okay. If you're going to be a bull, buy a dip. You're going to be a bull, buying the implied low moving average. You're going to be a bull, buy the moving average implied low. See how quickly we can do this? Ooh, mediocrity pass. Ooh, buy a dip. It hasn't even dipped. Okay, this might be a buy a dip off the moving average implied low, which is also a roll reversal. See, how long does it take you to do your analysis? Okay. Okay, you already missed the opportunity. Sell it off the moving high or the moving average. Again, projected high, right around there, right around the moving average, right around roll reversal. So open up your hourly chart on CAD Swissy. You might have an opportunity to sell in the near future. Same thing, USD Swiss franc, roll reversal, moving average, implied high. Open your chart, you might have an opportunity, so on and so forth. Gold, okay, maybe a roll reversal moving average could come down a little more. We're going to lose volume and volatility. So you've already kind of missed it. Yeah. So you're really setting up tomorrow's trade. Little bit of capitulation in the market right now. I guess maybe the capitulation has to do with waiting for the stock market to open in the next few minutes. And I have some trades to execute on that open. Let's do a headline update. Cardano price forecast. ADA flaunts bullish structure, targeting $1,000 as open interest surges. Oil prices stable ahead of key Trump-Putin meeting. China bank lending declines in July.
Bay Street likely to open on positive note. Initial trends suggest Wall Street to open moderately up.
Gold holds above $3,250 as mild inflation data weighs on U.S. dollar.
U.S. Treasury SEC Besant. Good chance of 50 basis point rate cut.
The list for Fed chair expands, adding some outsiders including Rick Rader, David Zervos.
Bitcoin price forecast. BTC hovers around $120,000 resistance, catching up with gold in YTD returns.
EM portfolios see second biggest monthly inflow in 4 years, IF data shows. Cool, this is our Squawk Box, by the way. So you can just sit here or open this page and just let it run in the background while you're doing your chart analysis. Okay. Isn't that cool? Totally cool. Hey, trader, have you heard the news? So there's nothing on the calendar 12 hours. So we're on a free and clear plan today. So this is what's been brought up since yesterday.
U.S. Treasury SEC Besant. Good chance of 50 basis point rate cut.
So that didn't exist until yesterday. And just a few hours ago, like around 6 o'clock in the morning, I looked at this, and there was no chance of a 50 basis cut. None. This was 0.0. In fact, it wasn't even here. And over here, we were at like 96, 97% chance of a cut. So since the headline news has come out, right, on our Squawk Box, things have changed. So a 25 basis point cut is now 99.9% priced in by bankers. And that 50 basis point cut that Besant was talking about?
U.S. Treasury SEC Besant. Good chance of 50 basis point rate cut.
Is now priced in. Now, this page I pulled up, a half an hour ago? Let's refresh it and see if it's changing. And it has changed. So that guy that priced in a 50 basis point, he got priced out. How funny. See? And so we track this in real time. Okay. And we lost a little bit of our left fat tail, right, in a kurtosis. No, not the, what do you call it? Keto? Not keto kurtosis. But, let's see. Fat tail. Is it with it? See? Horribly. I've spelled it so bad it has no idea. Maybe it's with a K. I've just butchered it. Fat-tailed distribution. We're on the right. Fat-tailed distribution. is a probability distribution that exists in large skewness or kurtosis. There it is. Relative to that of either normal. So we have a left skew fat tail, which is this idea of kurtosis. And yeah, I had to do all this crap. Can you imagine having to calculate all this? Yeah. So anyways, going back to this, we do not have a normal distribution. I imagine if we go out a year from now, we will. So let's go out 1 year. Okay, there we go. So that's a normal distribution. Right? Where's my dog? Sorry to go all Euro US dollar price forecast, buyers waiting for fresh clues.
Euro US dollar analysis. The euro attempts a recovery. 13 August 2025.
US dollar EBRL analysis. Long-term lows in sight as good correlations remain. 13 August 2025. Okay, so this is a normal distribution. And what we're looking at in these, not just the one we're looking at because it's hard because it's 100% one thing, but as we shift, let's say the October and then December meeting, interest rates are much more likely to be like this, skewed to lower. And what we're measuring is, the size of the tails and all that kind of stuff. And so when we mean skew, it means when we measure different time frames, interest rates are being cut. That's what it's saying. The skews to the left and the likelihood of interest rates being lower is higher, then higher is lower. Okay, and so the lower is higher and higher is lower is the measure of kurtosis in the distribution, leaning toward a left skew. And how many people know how to translate that into trading the US dollar? Because everybody at TRADARS should know all of this because I've taught it over and over and over and over again. What is that left fat tail skew tell you about the likely value of the US dollar? Up or down? Okay. Be great if you knew. Imagine if you didn't know, and yet dozens of people here do know. What does that tell you as a currency trader? Maybe you don't know what's going on. Maybe your RSI doesn't know everything. Huh? You're like, wow, I logged onto YouTube today and analyzed the difference between a normal distribution and a left fat tail skew through kurtosis analysis, and then translated that into a dollar trade. You should be able to do this yourself at any time. Now, I'm going to take all of this and embed it into TRADARS, so you don't have to memorize where all these sites are. But and then I might even be able to then take that and do the math so that we can automate the kurtosis analysis into potential dollar strength and dollar. All right, so Osamu's answered, but nobody else. I'm not sure if we have a lag. Is YouTube lagging like crazy? Yeah. Well, the stock market's about to open, and I need to do some trading. I got some money to move. I got some rotation to make. But thank you to the Council of Investment Advisors. We've already rebalanced. They gave me the mandate. Yeah. And so now I just need to rotate a little bit. I did some yesterday, did some today. And we actually allocated to new investments. Now I just got to put a ribbon on it. And I still have some cash left over in case there is a drop later. Sweet. Already know what to buy. But yes, Osamu is correct. In the analysis, in kurtosis analysis of the distribution, Osamu's right. When you notice a left fat tail skew, you sell the US dollar. If you don't know that, or you don't know how central banks work, you don't know how to analyze smart money, you don't know how to analyze the bond market and the treasury market, and do things like calculations of the potential for central banks to cut or raise interest rates based on bond math. If you don't understand that, and everybody else here does, you're not competitive enough. You're just not competitive enough. You're not a serious competitor to the people that do know, and to people that do have the tools, and the people that do have the performance coaching. They will just make better decisions. Get ready. EIA data will be released at 10:30 a.m. ET. Crude oil bias is bearish. Thank you, me. Wow, look at, I just informed myself. Yes, it's Wednesday. It's oil trading day. So anyways, peace on earth. May the pips be with you. May your profits be above average. Enjoying the stock market open. I got to go.